Hello, fellow Rebel Capitalists. Hope you are well. So we've got more news in the real estate market. You heard about the 50-year mortgage and how that's basically turning America, or that would turn Americans into housing serfs, medieval serfs. So now you don't ever own a home, you just rent it. It's weird, right? Going back to what Klaus said in the World Economic Forum. You will own nothing, you'll be happy. I don't know, maybe they're talking about a 50-year mortgage. But we've got more news. They're trying to turn the real estate market into a casino. Yay! Like we need more degenerate gambling in the United States. We've turned everything into gambling. It's like, forget starting a business, forget creating goods and services, forget creating value. The real way to do it is just to speculate and to turn every single thing in life into gambling and into a big casino. And now they're doing it with real estate. I'll show you how. I'm going to get really frustrated here, because not only does this piss me off that they're doing this to the entire economy and they're doing this to society, but they're also pulling the wool over the retail investors' eyes. Basically, what they're doing here is they're trying to Robin Hoodize the real estate market. And you guys will see exactly what I'm talking about. So here you go. The startup backed by Bezos and Benioff, speaking of the World Economic Forum and the Malthusian cult, launched a trading platform for shares of rental properties. Woohoo! So now you can day trade 2-bed, 1-bath homes in every single ghetto in the United States. Isn't that awesome? I mean, day trading real estate. What we're doing here is we're basically combining the worst part of the dot-com blow-up in 1999 with the worst part of the housing market bubble in 2006. And we're just putting them together and expecting that the end result won't turn out poorly. I mean, who are we trying to kid here? Who are we trying to kid? I mean, this is a bad idea on so many levels. By the way, one of the benefits to real estate is it really doesn't move that quickly. Like the prices. And by the way, let's just think this through. The way let's take NVIDIA. The reason people are paying more and more, well, not today, but before today, the reason why people were paying more and more money for NVIDIA is because the earnings expectations is increasing into the future. So they're like, yeah, we're willing to pay a PE of 40 because we expect NVIDIA to be earning more and more money, exponentially more money in the future. Their earnings growth is 50% or whatever it is. How does that work with a rental property? Like, I've owned many, many, many rental properties in my day. And the rental income is basically the exact same every single year, minus maybe 2 to 5%. Maybe in 2021 and 2022, you got away with 7, 8%. But now, if you guys watched my video yesterday, the rents are actually decreasing in a lot of markets and decreasing big time. So, I mean, you look at how much you can collect in rent, and okay, maybe if you look at the span of 20 years, you can increase the rent by 2-3% per year. Isn't that already going to be priced into the like I don't understand what the upside is here. And they say that, oh, you can get the cash flow from the rental property as a dividend. And that's what really pisses me off. That selling point really pisses me off, and I'll tell you why here in just a moment. But this company is called Arrived. Woo! Is creating a so-called stock market for real estate, where investors can buy and sell shares of rental homes. I wonder, who do you think manages these rental homes? If you guys had to guess, who do you think it would be? Maybe Arrived? Aha. Now we're starting to get into the scam. Let's keep going. Investors can buy in for as little as $100 to build their own portfolio of properties. What's your upside? this is so ridiculous when you say it out loud. This is just such an obvious scam. You know, it's just as obvious as Open Door. Remember Open Door when Chamath was pushing that on CNBC? And I was doing videos. I did at least 3 or 4 videos on that. How I'm like, look, I'm a real estate guy. That's where I started here. So I can see right through this BS. And that's all Chamath was saying, which is BS, BS, BS. How they're going to turn this into some sort of tech company. I'm like, real estate is not a tech company. I can assure you of that. I don't care what kind of software you have. At the end of the day, you're dealing with tenants and toilets. And I don't care what type of AI or whatever you have. It ain't going to improve that. Property management is what it's all about. And property management is a terrible business. I mean, it is a horrible business. I can't think of a business that's worse than property management. Let's keep going here. And that's what I was saying with Chamath. I'm like, I don't care how many apps you have in your stupid phone or whatever. At the end of the day, you're still either a property management business or you're flipping houses, which I think was Open Door's model. And they're just trying to find a greater fool. We saw how that panned out. Arrived is announcing a new $27 million fundraise to help launch a secondary market platform, another the stock market for real estate. And by the way, it's just real estate they own. So if they have, let's just say, an IPO, well, what are they doing? They're just raising money for the Robinhood types, the retail investor that doesn't know any better, to give them money to buy overpriced homes that the retail investor is holding the bag on because they have the equity. Meantime, instead of creating a fund where they're only collecting 2% in fees, here they're collecting 10, 12, who knows, 15%, 20%. Because remember, they're the property manager. See, that's what this is. That's what this is. This is a terrible business, a property management company that's disguising itself as like some sort of new tech company in an effort to, instead of it's like a mix between a fund and a property management company. And they're disguising themselves as this new revolutionary technology in an effort to, instead of charge 2% management fee, they can charge a 10 or 20% management fee. You see, because what's going to happen is, sure, you're going to get a revenue stream if there is positive cash flow, which who knows, right? If there is positive cash flow, you might get some crumbs, but who do you think's getting paid first from that rent check? I can assure you, it ain't going to be you. It's going to be Arrived. And see, this is what they don't tell you. And in fact, what we're going to do here in a moment is we're going to go over to their website, and it's unsurprisingly sparse. But let's keep going here. Rather than investing in public real estate investment trusts, they can build their own portfolio of properties. Yay! It's like they're trying to present themselves as a business of the people. That before now, real estate was just totally unattainable. But now, for every single person out there that's a degenerate gambler, and the whole retail crowd that really doesn't understand the real estate business, doesn't understand the due diligence, and definitely doesn't understand how we are robbing them blind, we're going to go ahead and give them this product that will satisfy that urge. You know, I need another hit here. It's like a heroin addict. I need another hit here. I need another hit. I just don't have enough things to be a degenerate gambler over. I mean, crypto, okay, that's crashing. The stock market, okay, that's crashing. I need some other fix here. Geez. I mean, that's where society has gone. It's sad, but it's true. So far, Arrived has roughly 500 properties across 65 cities. It's been doubling its property count every single year. So again, what they're doing is they're like, well, we want to go out and buy these properties because there's no way people are going to have us manage their properties because we don't know what the hell we're doing. And property management is a terrible business in of itself. So what we need to do is we need to find some suckers out there to buy all this overpriced real estate. aha, let's go ahead and create a trading platform, and we'll just basically IPO all of these homes that are most likely in the ghetto that no one else wants to buy. And we'll just overpay by 20% to the unknowing Robin Hood types out there that are just going to eat this up. I mean, Arrived is now announcing, like we said, 27 million to launch this secondary thing. Their shares of individual homes across the US in minutes. This allows them to quickly exit and expand positions, as well as capture appreciation and rebalance portfolios. Oh, really? And what happens if the prices go down? Because A, we're in a bubble, and B, because I can assure you that they're going to be overpaying for properties. Why do I say that? Let's back up a little bit, because this is really on par with Open Door and their flipping model. In order to get a good deal, especially now that we're in a bubble, back in 2012, you could get a great deal easy. But now it's impossible because you have so much competition. So what happens is, let's say that you've got a house where we call it the ARV, the after repair value. Let's say the ARV is 100 grand, just to keep the math easy. And let's just say that that home is selling for 80,000. Well, it's going to need 20,000 in repair, but it's not going to be able to sell at 80,000 because no one's going to buy it for 80,000, then spend the 20 just to get it up to 100, because that doesn't pay you for your time. So maybe an investor would be willing to pay 70,000. So then there's a profit of maybe 10,000, right? But then what happens is you get more and more competition, more and more demand. So that 70,000 goes up to 75, goes up to 80. Now you have people going up to 85. Well, why would they do that when the ARV is 100, but now out of pocket, they're going to have 105,000 because they're banking on appreciation. But if the appreciation never comes, they're screwed. You see? So now that we're at this point where, let's just say the real estate, the local real estate investor that has all of the insider knowledge, that knows these things, or that knows this market on a street by street basis, like the back of their hand, who knows all of the wholesalers, who has all of the, like we said, the insider intel, they're willing to bid it up to 85. But then you've got Arrived that comes in and is like, no, we've got all these stupid suckers that are willing to trade on our platform, and we're going to go ahead and pay 100,000. We're going to bid up the price even higher, and we're going to have to put in $20,000 in repair. Now we're at 120, and remember the ARV, the market value is 100. But what does Arrived care? Because all they're doing is just taking the sucker's money, and then they're buying the asset with the sucker's money. So they're the bag holders. And then what they're saying is, okay, we can rent this out for $1,000 a month, and we're going to go ahead and take a management fee, because remember, they're the property manager. That's the model here. And they're going to take a whatever. A normal management company would charge 8 to 10%. So I'm sure they're going to be charging 15% to manage all these crappy properties that the retail investor overpaid for. And then they're going to be laughing all the way to the bank. And then what happens if the price of the property goes down? Then Arrive doesn't care. Who cares? They don't have any equity. They're just the property manager. They're just collecting a percentage of the rent every single month. And oh, by the way, let's say it needs a new roof. Let's say it needs a new foundation. Let's say it needs a new hot water heater. Do you think Arrived is going to be paying that? Absolutely not. They're going to be paying that out of the rent checks. And then they're going to be paying themselves. And then whatever crumbs are left over, you're going to get. And then they're going to sit there and say how this is awesome because it allows the small guy to go and capture appreciation, without telling the small guy that it's also going to capture any depreciation. And this is just a ruse. It's an outright scam. It's a complete ruse. If you want to invest in real estate, heaven's sakes. Invest in real estate. Get a loan, do whatever. Save your money, for heaven's sakes. Should real estate be accessible to every single Joe and Jane out there that has $100? Probably not. Probably not. Back in the good old days, when you had to have 20% down payment, that was actually a good thing. That was actually a good thing. It made the real estate market much, much, much more stable. And I think that at the end of the day adds value. That's what increases the standard of living over a long period of time. You know what I did? I think I probably deleted the chart. On the whiteboard video I did today, I pulled up a chart of the average mortgage payment adjusted for inflation going back to the 1970s. Do you know what it was in 1972? In 1972, it was under $1,500. You know what it is today? $3,500. $3,500 adjusted for inflation. So that means in 1972, the average homeowner had an additional $2,000 a month adjusted for inflation, that for just disposable income that they could save, that they could invest, they could buy gold, they could whatever. An extra $2,000 a month. Think about what that would do to the standard of living. Well, why? How is that even possible? It's possible because we had more supply. We had more supply of homes. That's how people profit from real estate. Is you allow the free market to work, you allow the free market to produce more and more supply, and therefore that brings down the price. But you see, the politicians, they've made it so that's impossible. Because if the price goes down, who does that impact? Well, that impacts the old people that own homes, and those are the people that go out and vote. You see, so what they've done is they've created this central planning scheme where the only way to get ahead in real estate is if you have price appreciation that inevitably blows up because it causes a bubble. And then everyone else is just left picking up the pieces when their equity is completely destroyed. I mean, and then you just go through this cycle instead of what we had in the 1970s, where the government really wasn't involved in the real estate market at all. I mean, you still had the 30-year fixed, but other than that, the government really wasn't involved. And sure enough, did we have prices go up adjusted for inflation? No. If you look at a chart of 1890 to 1997, home prices were flat when you adjust for inflation. That's the way they should be. And that's the way they would be if we had a free market. And if that was the case, guess where the average mortgage payment would be today? I can assure you it would not be $3,500. That housing would be much more affordable, and the average Joe and Jane would have much, much more disposable income. But instead of that, we're just doing more financialization of the real estate market and turning it into a massive casino. Where it's not just a massive casino, we're turning it into a big scam where we're just trying to sucker all of these retail investors, the Robin Hood types, into giving us money so we can go ahead and buy overpriced property. They hold the bag, and we can charge them astronomical fees for property management. I mean, what they're doing isn't illegal. But I mean, morally, ethically, is it criminal? I mean, I think so. All right, guys. On that bombshell, go out and set up your trading account with Arrived so you too can own $100 share of a 2-bedroom, 1-bathroom, 750 square foot house in South Chicago. Woohoo! Doesn't that sound like fun? As always, make sure you're standing up for freedom, liberty, free market capitalism. Free market capitalism. And we'll see you in the next video. Jeez.